In the summer of 2019, WeWork was the most valuable startup in America. Valued at $47 billion, it was poised to become one of the biggest IPOs in history. 6 weeks later, the company was on the brink of bankruptcy, its founder ousted, and its valuation slashed by over 80%. This is the story of how a real estate company convinced the world it was a tech unicorn, and how one of the most spectacular corporate collapses in modern history unfolded in real time. Adam Neumann arrived in New York in 2001 with big dreams and little money. The Israeli-born entrepreneur had served in the Navy and tried several failed business ventures. In 2010, he co-founded WeWork with architect Miguel McKelvey, pitching a simple idea: beautiful shared office spaces for freelancers and startups. The concept wasn't new. Co-working spaces had existed for years. But Neumann had something his competitors didn't: charisma, ambition, and an ability to sell a vision that transcended the mundane business of renting desks. Neumann didn't want to run a real estate company. He wanted to change the world. WeWork, he claimed, wasn't about office space. It was about community, consciousness, and a new way of working. He spoke of elevating the world's consciousness and making members' lives more meaningful. Investors bought in. Between 2012 and 2019, WeWork raised over $12 billion from venture capitalists and SoftBank's Vision Fund. The company expanded aggressively, opening locations in dozens of cities worldwide, burning through cash to fuel breakneck growth while Neumann preached his gospel of disruption. The fundamental problem with WeWork was simple: the business model didn't work. WeWork signed long-term leases on buildings, renovated them expensively, then rented out desks on flexible, short-term contracts. When the economy was good, this worked. But the company was essentially making a risky bet that short-term revenue would always exceed long-term obligations. Traditional real estate investors saw the flaw immediately. WeWork had all the risk of real estate with none of the stability. It lost money on every location. In 2018 alone, the company burned through nearly $2 billion. To justify its astronomical valuation, WeWork needed to be a technology company. Real estate companies trade at low multiples. Tech companies can command valuations in the stratosphere. So Neumann rebranded. WeWork became a tech platform, a data company, a community business. The company filed its IPO paperwork under the name The We Company and claimed it was a technology company that happened to lease space. But strip away the marketing, and WeWork was still just a landlord with an app. The market wasn't convinced, and the tech illusion began to crumble. In August 2019, WeWork filed its S-1 document to go public. What should have been a triumph became a catastrophe. The filing revealed stunning losses, conflicts of interest, and Neumann's erratic behavior. He had trademarked the word "we" and sold it back to the company for nearly $6 million. He had taken out hundreds of millions in loans against his WeWork stock. He controlled the company through special voting shares, giving him complete power. The more investors read, the more alarmed they became. The IPO roadshow was a disaster. By September 2019, WeWork's valuation was in freefall. Investment banks slashed their estimates daily. What started at $47 billion dropped to $20 billion, then $15, then $10. Major investors demanded Neumann's resignation. On September 24, he stepped down as CEO. The IPO was cancelled. WeWork was weeks away from running out of cash. SoftBank, already invested for billions, had no choice but to stage a rescue, taking control and injecting nearly $10 billion to keep the company alive. Neumann walked away with a $1.7 billion exit package. Under new leadership, WeWork began the painful process of restructuring. The company closed unprofitable locations, laid off thousands of employees, and abandoned Neumann's grandiose side projects. In 2021, WeWork finally went public through a SPAC merger at a $9 billion valuation, a fraction of its peak. The company continued to struggle with profitability and relevance. The pandemic's shift to remote work undermined the very premise of communal office space. What was once worth $47 billion was now a cautionary tale about hype, hubris, and the dangers of prioritizing growth over fundamentals. The WeWork disaster offers clear lessons for investors, entrepreneurs, and employees. First, charisma is not a business model. Newman's ability to inspire didn't change the fundamental economics of real estate. Second, governance matters. Unchecked founder control enabled years of excess and mismanagement. Third, sustainable growth beats hypergrowth. WeWork's race to expand left it fragile and overleveraged. Finally, you can't fake being a tech company. Slapping an app on a traditional business doesn't transform it into a unicorn. These lessons seem obvious in hindsight, but billions were lost learning them. WeWork's story is more than a business failure. It's a symbol of an era when vision trumped reality, when storytelling substituted for strategy, and when the line between confidence and delusion blurred beyond recognition. The company that promised to elevate consciousness instead elevated questions about Silicon Valley's excesses and the consequences of unchecked ambition. Today, WeWork survives in diminished form, a shadow of Newman's grand vision. The $47 billion valuation is gone, but the lessons remain. In the end, even the most compelling story can't overcome a fundamentally broken business model.